Okay, so let's talk about the 2026 housing market, because something really weird is going on. Just when you think you have it all figured out, the data comes in and tells a totally different story. It's a real paradox, and we're going to break it down.
So, you know the deal. The economy is facing some serious headwinds right now. Mortgage rates are up, which makes buying a house more expensive. And of course, every time you fill up your tank, you're feeling that pinch. It's pretty much a textbook recipe for a housing market to cool down.
But here's the twist. Against that exact backdrop, something else is happening. Instead of everyone staying put, in some really important places, we're seeing more homeowners putting up that for sale sign. So what on earth is going on?
Well, that question leads us to the first part of this puzzle, this really surprising surge in sellers that pretty much defies all the expectations.
You know, all the experts thought they had this pegged. The conventional wisdom was, hey, rates are going up, so sellers are going to get nervous. They're going to lose interest, hunker down, and just wait for a better time to sell. Makes total sense, right?
Well, the reality is something else entirely different. In a bunch of key markets, new listings aren't down, they're not even flat, they're actually going up. In some places, they're climbing even faster than we'd see in a normal pre-pandemic spring. The expectation was totally wrong.
But here's the catch. This isn't happening everywhere, not even close. This trend is really concentrated in a specific type of city, and figuring out where it's happening is the key to understanding why.
So where are these epicenters? Well, it's basically a who's who of America's biggest tech hubs. We're talking about Silicon Valley, Seattle, Austin, and Denver. These are the cities where the market is really starting to show this strange new pattern.
And this leads us to two completely different possible explanations. So, which is it? Is this a good sign, a sign of confidence? Are sellers just feeling optimistic and thinking, hey, it's a great time to cash in? Or is it actually a sign of distress? A sign that tech layoffs are forcing people to sell their homes, not because they want to, but because they have to.
And this is where we have to be really careful. The analysis suggests that this flood of new homes might not be the great news it seems like on the surface. It could actually be a cautionary tale, driven more by people losing their jobs in the tech industry than by a healthy market where people are excited to move.
To really see how these two forces are clashing, let's zoom way in on one specific case study, Seattle. Because in this one city, the market is telling two completely different stories at the exact same time.
What's happening in Seattle is just a perfect example of how complicated these markets are now. You really can't look at the city as one single market anymore. It's effectively split right down the middle, creating a tale of two Seattles.
And just look at this breakdown, it says it all. In the downtown core, listings are actually picking up speed. The big drivers there seem to be things like return-to-office policies and slower price growth. But you just drive a few miles out to the suburbs, and the market is completely depressed, just like the rest of the country. It's really two different worlds.
And think about this. This isn't just some short-term blip. We are now a full 6 years past the beginning of the pandemic. And those long-term changes it kicked off, especially things like return-to-office mandates, are the very things creating these deep cracks in city markets like Seattle's.
Okay, so we've looked at the national picture, we've zoomed into the tech hubs, and we've even gone neighborhood by neighborhood in Seattle. But what does all of this actually mean for you? What's the big picture takeaway here?
I think the single most important concept to understand right now is this. We are in a fragmented market. Gone are the days of the U.S. housing market. It just doesn't exist anymore. What's happening can be wildly different based on your city, your neighborhood, and even your specific price point.
So let's just boil it all down. First, you absolutely cannot trust the national headlines to tell you what's going on in your backyard. Second, keep an eye on these tech hubs. What's happening there is unique, and it might be a warning sign. Third, never underestimate the power of superlocal things, like a company's return-to-office policy. And finally, and this is the big one, every single market is on its own path right now.
So all of this really leaves us with one last really important question. If there's one thing this data shows, it's that to really understand what's going on, you have to look past the big headlines and get into the local details. So the question for you is, what story is your local market telling?